All right, good afternoon all. It's my pleasure to be moderating the next panel. My name is Martin Blechta. I am a partner with BCG, and I lead our work with digital banks and also helping the traditional banking clients with their digital transformation. I'm currently based in the Middle East, and I advise our Fintech and digital banks portfolio over there. Previously, I was based over here in Singapore, covering the Southeast Asian banking market. The topic for today is neobanks and how will the competitive landscape change over the next 10 years. Today with me I have many of my amazing fellow panelists, and we'll take you through in the next 30 minutes through this very interesting topic. So I'll start with a very brief introduction, maybe from my right-hand side.
Hello, I'm Katya Intaravishai. I'm the CEO of Kasikorn Bank, or you can call us as K-Bank. Should I introduce the K-Bank to the...
Sure, very brief, of course, why not? I think audience would like to know, please.
Okay, so we are the third largest bank in Thailand, but we are number one in terms of digital area. So we are number one in terms of mobile banking. We have almost 24 million users with the active of 75%. And we have been working with a lot of partners in the financial area, with the Fintech area, for example, like TransferWise or Niam, or some other partner like JP Morgan or Lombard Odier. We have a largest high net worth customer base and also the SME lending. Yeah, so that's K-Bank. Thank you.
Thanks. My name is Jeff Parker. I'm the CEO of Paymentology. We're a modern issuer processor, and we help fintechs and digital banks to launch, manage, and scale their card programs. We have clients in 65 countries around the world, and in this region, we support banks like Mox Bank in Hong Kong, True Money, GoTime, to name a few in the region.
Hi, Emma Hagan, the Chief Executive Officer for ClearBank UK. ClearBank has a bank in both UK and Europe, and we do two things. One is access to clearing payment rails and accounts for regulated financial institutions across UK and Europe, providing real-time, seamless access to payment rails and the resiliency of a modern digital bank. And the other piece that we do is, particularly in the UK, we're the leading embedded banking provider in the UK market, where we partner with other fintechs to embed banking products into their front-end user experience. We partner with the likes of Revolut and Coinbase and many others, where we offer that through their front end to their end user base.
Hi, my name is Boyan. I'm the Group Head of Innovation and Digital Partnerships at HSBC, and I have the distinct pleasure and honor to lead innovation for one of the largest global banks in the world. And what that means is really driving innovation through primarily the emerging technologies that are transforming financial services, so artificial intelligence, blockchain, quantum computing, as well as a number of the trends that are disrupting and changing financial services. I'm based in Hong Kong, and I lead a global team that's looking across many of our markets.
Amazing. So let's get right to it. So as I mentioned, the overall topic of the panel is how will the competitive landscape for neobanks change over the next 10 years? And I can tell you it's already changing extremely dramatically and fast. I spoke on a similar panel here around a year and a half ago, and back then the topic was still focused on hypergrowth, raising capital. Now things are already changing quite a bit. When you look at the likes of Monzo, Revolut, Nubank, all of them are really showing very strong financial results, and there's a strong shift already in the broader segment from this hypergrowth towards profitability and much more nuanced growth, focusing on the right sectors and segments. So just to start us, maybe the first question, and Jeff, if I may, I would ask you to get us going. Then where do you see the main, let's say, white spaces still remaining when it comes to the neobanks, and how is the landscape changing overall?
Yeah, I think, look, this industry is changing rapidly, and I think you touched on a couple of points there. I think one of the major changes we've seen is this shift from, I guess, growth at all costs to profitable growth, and I think that kind of transcends through the industry in terms of the behaviors. I think from a capital perspective, I think there's still plenty of capital out there, but there's been a flight for quality, so I think the bar is set higher at the moment, so there's capital available, but it's harder to access. I think we're seeing continued, I guess, competition around things like cross-border. Cross-border seems to be a real area of competition, especially in the fintech and the neobanking space. And then I think probably the other area I'd pick is around the term banking as a service. I know it means a few different things to different people, but I think we had banking as a service 1.0 2 years ago, and that kind of went a bit of a rocky road with some compliance issues and people moving. But I think we're starting to see that kind of come back to the fore again with compliance and security at the heart of things. In terms of white spaces, I think what digital banking has done, given the advantages you can get around cost structures, is it has allowed segments that perhaps were not profitable before to be targeted. So if we look at the SME space, I think there's lots there around embedding workflows, automation tools within software, etc. I think is a massive opportunity. We're seeing a lot of interest around the gig economy, freelancers, faith-based banking, so around in the Middle East where we service clients like Bank and D360, the big trend towards kind of Islamic credit. And I actually just think more broadly, in the digital banking space, there's still white space. There's obviously been lots of people that have come into this space, but 90% of the market is still traditional banks, and I think consumers are still looking for better kind of payment experiences, which hopefully the digital banks are providing.
Very good. I think, look, obviously there are let's say, some issues which are very, lucrative from a banking standpoint. The SME space in many markets is really underserved, but it's also very good profitable business with healthy margins. But what we also see a lot is what you mentioned, Jeff, is some of these more underserved segments, right? I spoke recently on a panel on financial inclusion, and it was quite clear still around 1.4 billion people remain fully unbanked, without a basic access to a bank account globally. And many of the neobanks and fintechs, this is also the problem they are trying to solve. So it's both about, let's say, getting and tapping into these new markets where it's more about provision of financial services, and then of course going after these lucrative subsegments where there's a healthy margin and fees to be generated. On the same topic, Emma, Bojan, anything else you'd like to add on the white spaces that you see from your perspective?
Yeah, I think certainly in the UK and the kind of European markets, a lot of the kind of disruption and innovation, I think as we've talked about, has come up through kind of more technology, digital native banks, kind of founded for the kind of user experience people expect today. They expect it in their personal life, and if they go on to start an SME, they expect it there too. I think where the white space is created is on those two pieces. One is those deep verticals where perhaps they have been underserved, or they're not maybe shown quite as much interest, or the products, the innovation isn't quite there in the same way from the traditional banks. So I think that's kind of one, that deep vertical. But I think the other space is wholesale, where really we haven't seen that same kind of shift. And as I think on two trends, one is as we see that next generation of digital natives kind of move into the wholesale market in leadership positions, they're going to expect that same digital native experience, the same seamless customer experience to be delivered. And I think that is an area right now where, for lots of reasons, cross-border, lack of kind of technology and innovation in that space, it's ripe for domination by some of those really quite substantial now, and I think to the point made before, credible, profitable, kind of reputation-driven, risk-orientated digital native banks that have grown up and now have the scale to compete effectively in those markets and on a cross-border. And I think as we look across to things like blockchain technology and AI, that only makes it more and more likely that the pace of that innovation is going to grow quickly.
Maybe just to add, Jeff and Emma have actually covered it quite comprehensively, but one particular area that we've seen as more of a traditional large global bank where virtual banks, digital banks, or neobanks have stepped into faster than us is in the adoption of crypto. So if you think back to this conference over the last 5 years, there's been a lot of discussions around Web3 and then crypto adoption in particular, and you've seen that step change happen over the last 5 years with many of the global banks stepping up and now seeing their risk appetite so open towards this. But several years ago, many of these banks have actually made those choices and have started offering cryptocurrencies to their clients early or connecting with many of the virtual asset service providers to offer seamless cryptocurrency trading. And that's certainly an area that we've seen in a number of markets, including in Hong Kong, where the virtual asset or non-traditional competition has stepped into quicker than many of the traditional banks. At HSBC, we're still not, our risk appetite is evolving, but we're not still, cryptocurrencies remain outside of our risk appetite, and this is an area that's evolving for us, but certainly an area that's been captured by these banks.
Can I add? Yeah. Of course. I think the financial service, the boundary is quite blurred right now. So for the financial service, it's no longer the transaction. It's no longer the transaction, but it's more about it's more about embedding the financial service into like digital daily life, and it will transform from the product-driven competition to the experience-driven ecosystem. And the white space, I think I agree with the three speakers. I just would like to add on the SME and the gig economy worker and also the aging society. So the segment, each of the segment, they require transparency and hyper-personalized. For example, like the aging society, they need the care financial service. And then also it has to be very transparent and what should I say? It has to be very simple for that. So I think, and also the other one is that the landscape will change, like since technology is already in every device. So in all the device, can be like a smartphone, wearable, car, and home. So that's it's the other level that it's the financial service that already autonomously run in the backbone. Yeah.
Very good. Look, let's try to take it a step further. So of course these are white spaces, and as you can hear, there's still a lot for the neobanks to get into and then attract and attack in terms of a new market. But the second question is, how do you then go and win some of these segments and clients? And to be honest, when you look at the trajectory globally, there are amazing success stories from Latin America to Hong Kong. In some geographies that I cover, I can tell you, for example, a market that I'm very close to now, Saudi Arabia. Currently, the second largest bank in the market by number of clients is actually a neobank that started not more than 24 months ago. So the traction and the speed to actually win in this market is fascinating. But how do you do it? How do you, as a neobank, gain some of this edge? So let's move on and explore this topic a bit more. Maybe Emma, now I'll start with you. Obviously, you run a neobank. So what would you say is somebody the edge or main advantage that you see still these neobanks have over the traditional players in the market?
Yeah, so definitely technology, because I think when you have an advantage at the beginning, particularly if you're starting from kind of a blank sheet of paper and you know what you want to achieve as an outcome, you know what parts of the market you're looking to serve or disrupt, depending on your approach. But you also have the opportunity to start your technology stack from scratch. So you can design it based on the latest technology. You're not hampered by legacy systems. You can look at what's coming in terms of a trend and future-proof it because you're new to market. You can also, and this is where we work with a lot of neobanks themselves in terms of accessing the market because they then need a partner. So for us, it was a lot if somebody's starting a new bank, so in the UK, some of the fastest growing neobanks, Alica and Oak North, they need somebody who works on the same kind of technology, seamless, resilient service as they're providing. Otherwise, as soon as they go to make a payment, they hit the slow lane. And that really impacts their user experience, which impacts their ability to compete effectively. So that was definitely one space. I think the other, and we kind of touched on it earlier, is risk appetite. And I don't think that necessarily means taking more risk, but when you know and you're creating from scratch, and you're bringing together a group of people, really smart people, whose goal is to innovate and disrupt, you can have a completely different mindset to how you approach that problem. So how do we solve for the problem and how do we serve that market effectively without being hampered by old school ways of thinking or the way things have always been done versus how can I do this really differently that makes it safe, keeps us kind of on the right side of working with regulators and government, but actually offers something different in the market. And that's been, I think, really the sweet spot. And again, as we look to certainly the markets that we serve, we see that in the neobanks. They really focus on what they do, and they really focus on their client in a completely different way to perhaps some of the traditional banks in the market.
I think, taking on from what Emma says, I think technology, I agree, is a key differentiator. But it's like, what does that technology actually allow me to do? It allows me to deliver a product with a lower cost structure. So that means I can have different unit economics, and I can look at different products that may have been not something a traditional bank could look at before. It enables me to do faster onboarding. So a lot of the digital banks are doing digital onboarding, real time, not just on the consumer space, but also on the business space. We were talking just before this show. One of our clients is VO Bank in the UAE, and they turned onboarding a corporation from weeks to minutes. And then I think that technology just gives you a much greater level of agility. So when you start to understand your customer and understand what the pain points are you're trying to solve, you're able to respond to those in a much quicker manner. And then finally, I think on the new technology stack, as you talked about, we build a single code base. It's a single set of APIs. It serves all the markets that we operate in, and we try to be an enabler to clients, and we create a configuration-rich platform as opposed to a platform that needs to be customized. And if you can keep it standard through configuration, that enables you to future-proof and stop you becoming legacy yourself. So I think it's using that technology to deliver these outcomes, which is also powerful.
Okay, so for us as universal bank, the commercial bank, with, like I mentioned earlier, the largest mobile banking customer base. So I think what we will do is that the objective is to be the trusted, innovative, and omni-channel partners, because we have both the digital and then the branch also. And we will, the issue is that we have to compete on scale, on the regulatory expertise and the deep relationship with the customers, and also the trust that has built for decades. So that's the edge that the commercial bank be able to compete. And so that's why we heavily invest in both the digital transformation while also maintaining strategically on the branch network. And also we also work with the partners in the ecosystem and the fintech, and we try not want to out fintech them. So we want to work with them, and so that's a belief that customer don't have to choose between the digital experience and human connection. Customer don't have to choose between innovative product and the regulatory safety, or the global features versus the local presence. So I think it's our role to provide them all. So I think that's how we compete, and with using the data to do the predictive of the customer needs and also personalize the offering. So that's using the AI and also data. We just start to explore on this. Yeah.
I just wanted to add one more point on what you've mentioned with regards to the partnership and fintech. Especially the Middle East, which is the market that I cover at the moment, we also work a lot with, let's say, the traditional banking institutions. And one topic that has been extremely popular over the past 12 to 24 months is actually setting up these corporate structured partnerships and also CVC, so corporate venture capital. I think many of our clients from, let's say, the traditional banking standpoint also realize there's a lot of value to be gained. And of course, what started as sort of ad hoc partnerships is now formalized through a portfolio of fintech companies. But in addition to that, of course, the funding comes hand in hand. So corporate venture capital and a lot of the inflow of the, let's say, what traditionally used to be VC money, actually now what we see comes from the traditional banking sector. Yeah, so that's another, let's say, trend that we see recently. And speaking of trends, maybe Bojan, I'll come to you now. You touch a little bit on crypto and so on and so on. So look, what else would you say are the key trends that we are seeing when it comes to the digital banking space?
Yeah, and I will just add that we have our own corporate venture capital fund, and we strategically invest into fintechs that the bank is looking to use in our ecosystem of products and services. So it is something that we, as a bank, are doing and strongly believe in. I think the way I would position this is we find ourselves in a very incredible moment in time as we are at this conference here today. And when we think ahead to next 10 years, I think it's very difficult to predict how they're going to play out. But what we see is that the breadth of change, pace of change, complexity of change is at unprecedented levels. What we are seeing is advancements in 3 very transformative technologies all taking place at the same time. Artificial intelligence at the top of the tree, and that has many different flavors as well. The traditional generative AI and now agentic AI taking form. We have blockchain, which is unlocking new ways of us to transact with money and assets, and potentially much more efficiently than traditional banking has been able to do. We have the rise of quantum computing, which is still maybe on the more emerging side, but it's getting to the state where that's going to feature prominently in financial services. In addition to that, you have a generational shift taking place. The Gen Zs within the next decade are going to represent the largest wealth share in the world. And this is the first truly digitally native generation that has only ever known about having access to information via the internet or their mobile devices at all times. And therefore expectations in the way that they engage with banks or any services for that matter are going to be fundamentally different than what, let's say, some of the previous generations are used to. And so we see the rise of new trends like embedded finance as well, changing the way that financial services are delivered through various forms of partnerships. And so when you put it all together, it is quite a lot of change taking place across all types of banking business models. And obviously the neobanks as well are coming in as non-traditional competitors. We see some other non-banks starting to compete in certain segments of the space. For example, stablecoin issuers are now looking to expand their businesses and go into more of the traditional payment route. So what we are focused in on is how do we actually take all of these technologies and start investing in them now to not only drive meaningful change with them across our businesses, but to really think about how we're going to future-proof our entire organization. Because these technologies are not going away, they're just simply accelerating. So the ability to actually harness this is going to differentiate the winners from losers, and the ability to make that happen with all of the legacy systems that we have, which of course neobanks are not going to have, is really going to be our big challenge. In terms of trends, the way I would look at the next decade is going to be unpredictable from many aspects, but these are the key drivers of change. and that we are significantly investing in with dedicated teams across all of those dimensions.
I would just say, I guess agreeing with you in terms of the technologies which are being used. It's what's the use case that we're going to try and use those technologies to drive. And I think we see a couple of use cases. One's around credit. So I think there's been a lot of innovation around prepaid and debit. I think credit is a massively under-disrupted market, and I think we'll be able to use these new technologies to understand much more about individuals on a use case to be able to give them individual credit limits and use cases. So pretty exciting, I think, for how that can unlock growth within both consumers and SMEs specifically. And then I think I touched on it before. I think the financial inclusion aspect is super important, and I think we can use some of these technologies to really provide services to people that have never had access to traditional financial services. In some of the markets that we operate in, still today in South Africa, it's an 80% cash market. So how do we turn that into a digitalized economy? And I think some of the tools that we've talked about here is going to be what unlocks some of that opportunity.
Very good. And look, I think one, let's say, common denominator that I keep hearing is, of course, the role of technology in all of this and how that enables the success and growth of the neobanks. I was also told, here, this frontier stage is the CIO, CTO stage. So, of course, technology is something that we must absolutely discuss. So maybe, and I don't know who this question is best for, but maybe Emma, I'll pick you. What are the key, let's say, tech enablers and that you are seeing that the neobanks will need to leverage on? And sub-question over that is the role of AI. Obviously, now we must address this as well. So what are the real applications that you're seeing either in your business or in the competitors, and how they are leveraging this to further grow their business?
Yeah, so I think we touched on AI and blockchain already. And I think the blockchain is a tech enabler versus, I'll call it, crypto in the kind of more traditional way that some people talk about it. I think that's a huge enabler. We've already seen, I'll call it, some of the tokenization aspects help accelerate the movement of value across border more seamlessly, and also through AI then helping to effectively make that work behind the scenes. And I think the other part, and we've touched a little bit on across the panel on investing, some of the big things that investors are looking for at the moment in terms of valuation drivers are how is AI helping enable your business, whether that's through reducing your cost to serve, so how do you make yourself more profitable, or by improving the customer experience and make that a real differentiator in how you serve your kind of end customers. And also on blockchain is if we take the assumption that blockchain and transfers of value via blockchain will disrupt and effectively remove over time the use of fiat payment systems, how are you as a company or as a neobank set up to ensure that you don't become obsolete? Because the technology today is just the technology today. It won't be in 10 years. And we've seen the pace of change never being quite as fast as it is today. The second you think you've got a grasp on what the thing is that you need to get to grips with, it's moving on already. And so I think that's a real difference. We've seen, certainly from our side, and again, we're a bank, so we have to be, like anyone here who works in banking, you have to know what you're doing to avoid a real pitfall on getting it wrong in the use of blockchain or AI or any other technology, because trust is a real key part of how you scale as a neobank. And trust is eroded in a second. And if you're small, you can't afford to take the big reputational hit that maybe a big traditional bank can. You are destroyed in seconds. Yeah. And so I think that part for us has been a lot about test and learn on specific use case and payment flows. So for example, if you were looking at payment, and everyone knows about payment returns, so something's gone wrong in the process. Historically, that would be a human looking at the data that's coming back and saying, what do I need to do with this return? Is it a refund to the client? Can I repair it and return? Those are specific AI use cases. We've seen real value where AI can be used effectively to remove the human in the chain, speed up the customer experience, return or repair a payment much faster. And that's a real enabler. What it's not doing is replacing humans throughout the business. It's not about reducing headcount or cutting costs. is about, again, just enabling that faster, reduced cost to serve across your business, but having actual real case, use case adoptions for AI in your business versus saying, hey, we're using AI because we've got Copilot installed, which, it's interesting, but it doesn't really say, why is that going to matter? Why should that matter to your customers?
Very well said. Look, the time is flying. I am being informed by the organizer that we only have 5 minutes left, so I will unfortunately slowly need to drive towards the conclusion. I would like to, leave the audience also with some, let's say, tangible insights on like what to really, watch out for over the next 5-10 years when it comes to the neobanking space. So for all of the panelists, maybe I'll start with you. What is one key message, one key trend that you would like to leave the audience with to watch out for in the neobanking space for the coming years?
So I was actually just about to say I have a very great use case to share in terms of how we've applied the blockchain technology in the banking space that maybe wouldn't come from a traditional bank, and we've, I think, in some respects surprised the market. But HSBC issued a tokenized gold offering on a blockchain platform a couple of years ago, and it's now the third largest gold token in the world, which is an example of how traditional banks can also continue to be at the forefront of innovation. But the one thing I would just kind of leave everyone with is, and what I tell to a lot of people at HSBC is, the most critical skill right now to have inside of our organization, and I'm sure in every other organization, is the ability to continuously learn and keep up with the pace of change. And if there's one thing I'd like to leave everyone with is all of these technologies are going to be making an impact to the financial services industry, and broader than that, to our daily lives. If we think about all of us are going to be at some point probably outsourcing certain aspects of our lives to AI. At that point in time, even our personal lives are going to change. So our ability to keep up with that is going to be critical for success.
Emma?
So I think traditional banks, I don't think in the future they'll be competed with by digital banks. I think digital banks will define what good looks like for the market. They will define what a traditional bank needs to be, because people will be looking for, and as we touched on the trends, the resiliency, the scalability, the innovation, the agility that digital banks deliver, and that will become the new norm. And so I think that as a trend will be the kind of way that digital banks will lead in the market, and that will hopefully, again, if we can future-proof the ecosystem such that that continues, that should deliver real value into our end clients and the markets that we're looking to serve.
I agree with that. I think to try and think of something else, I think the digital banks are going to drive the next phase of this banking as a service. I think it's the new technology that Emma talked about before is what's actually going to enable players to really kind of propagate banking services through embedded finance to be seamless into non-financial services companies. And I think that's going to be the driver.
Okay, I make it short. So in a different angle, so as the financial services is embedded in life, everyone's life, the bank or the financial service provider need to be very responsible, need to be very fair and transparent to the customer, because we embed the intelligence into that customer-facing platform. And as the technology grows, automation grows, there's a human expertise that we need to shift towards the literacy about AI and data, and also the ethic of oversee the algorithmic of the decision. So I just put in a different angle. Yeah.
Excellent. Well, ladies and gentlemen, as you can hear, the future will be extremely exciting. If you think the last 10 years were exciting, wait for the next 10. And with this, I would like to thank my fellow panelists, and please join me in thanking them with a round of applause. And thank you for having us.